So we are talking about, what about today's market conditions make it, advantageous. What about today's market makes it a good time to invest in real estate notes? So just going to go over a few different points on, the current market, some of the conditions that are going on right now, and why it's a good time to get into real estate note investing. So the first thing we'll deal with is kind of like when we talk about housing. There's a 5 month low when it comes to building new construction. There was a lot of building going on back when the first, when we had the GFC back in 2008, 2009, in those subsequent years, there was a lot of building going on. And, since then, we've really stopped building homes at a rate that we should be. And we're at like a 5 month low right now for new home construction. And it's down considerably from this time last year. It's becoming more expensive to build homes. Obviously the cost of certain things, have been going up post COVID, and there's a lot of regulations too when it comes to building homes in a lot of areas. There's a lot of loopholes that you have to jump through, a lot of costs associated with building. And right now, in an environment where interest rates are where they are, it's going to make it a pretty tough to be able to um, build a home and sell it. So um, this is one of the reasons why seller financing and learning how to buy notes, create notes is so important right now, because moving forward there is going to be a shortage of homes. So if you can, if you have a home, if you have an investment piece of property or something like that, single family rental, you want to look at creating a note, because there's going to be demand for that property. As long as there's, a need for housing, and then we have a shortage of housing, if you can create the opportunities for someone, there's a very high chance that you're going to be able to find a buyer, and you're going to create the financing and be the bank on that particular property. So, um, that's a really big, reason, um, why, in terms of like looking at housing, why you want to, understand notes and be able to create them. And like I said, possibly buy and sell them, just depending on what it is that you're looking to do. If you're somebody that's looking to expand your portfolio, you have the ability to buy notes. You have the ability to buy non-performing notes and then either modify them or take the house back, meaning that someone is in the property and not paying. You have the chance to go to them, modify the house. A lot of times, if you're able to buy a non-performing note, that property has equity in it. That's a lot different from the last financial crisis that we had. Most homes were underwater. Um, but now, if something does happen, say there is a change in the market, people, are forced to sell for, you know, if the unemployment ticks up and people run into financial issues, they most likely have a property that has, some equity. So they don't probably want to just walk away from that like a lot of people did during the GFC back in 2008. Because the house wasn't, the mortgage was more than what the house was worth, a lot of people just walked away from it. With that being said, in this atmosphere, it's a lot different. So if you can buy this note, let's just say, somebody's not made a payment in a year. They're still accruing interest and they're still accruing payments over that time period. So your unpaid balance, it's going to most likely be significantly higher than what you purchased the note for. So if that person has equity in the property and then they sell it, um, you have the right to maybe forgive some of the outstanding balance, or you have the right to ask for that whole balance. And then, because you're going to buy it for less than what's owed on it, you're going to be able to make money. And then a lot of times you can go to people in those types of situations and do some type of modification. And again, because you're buying at a discount, you should be able to structure it in a way that it makes sense for you. It makes sense to, where you can make it profitable for yourself, get yourself a solid return year after year. Maybe, bring down that payment somewhat to make it a payment that someone can make. And because you purchased at a discount, you have the ability to do that. And then you can get them back on track. And once you get them back on track, maybe after 3 months, 6 months, a year, you can then go ahead and sell that note if you want to cash out of it. So it's a lot that you can do, a lot of different exit strategies. So um, another thing about housing, 26% of purchases last year was in the affordable uh, house range by investors. So the reason why I bring this up is because with notes, a lot of times we can focus on the lower price band assets where the homes are affordable, under $150,000. There's a lot of properties out there that are in these types of ranges: 100,000, 80,000, 125, somewhere in there. I mean, obviously, you have the over 200,000, you can go into the millions, of course. But a lot of times, you want to, a big thing right now is affordability. And in some of these lower price markets, you can um, make sure that the property is affordable. A lot of times it may only be $750, $800 a month be the payment. And then obviously people live in areas where, they're not making maybe what they make in San Francisco or New York or, LA, but they're making, enough money, a good enough amount of money where they can cover, $700 a month, $800 a month. And these are in these lower price band assets. So there's some opportunity there to buy and make it affordable, because that's really key. And as you can see, over a quarter of the investors are looking in those markets, and I'm pretty sure that that number is probably going to continue to grow if there's any um, type of economic event or something that happens and causes unemployment and things of that nature to tick up. So thought that was important. Another reason why you want to look into notes, because a lot of times you may not have the $100,000, $125,000 to buy a property in these particular areas, but you can look at purchasing the note for a considerable discount and something that you can afford. Um, Also, too, right now there's a big issue with the realtors. This commission lawsuit that came out. These brokerages are having to pay these fines because of this lawsuit, saying that they kind of manipulated commissions and things of that nature. And what's going to happen is buyers now are going to have to pay their agent, most likely, because the person that lists the house most likely is not going to have it where the seller is paying that 5 or 6% to both parties. Um, so that's gonna drastically affect the realtors. So if you again can create a note on a property and you don't necessarily have to deal with a realtor, so to speak, in terms of putting a buyer in the property, um, that works out better for the buyer of the property. Um, you don't have to pay them. You can deal directly with the buyer, and the buyer saves some money there. Because that could be significant. That could be $2,500, $3,000, especially when you're talking, in these lower price band assets. That money can go directly to you as the person creating the note towards the down payment, as opposed to if somebody, has to pay a buyer. But also, the other way you could look at it too is that you possibly could offer an agent, a commission, if they can bring you someone. Because, if you're going to get a 10% down payment or more, let's say you get, it's $100,000 house and you get $10,000, or somebody that maybe comes in with $10,000 or $15,000, could you not take 2,500 of that or $2,000 of that or something to make sure that the agent is taken care of? They're paid because they brought you this particular buyer. You have the flexibility to be able to do that, and it can still be, work out a win-win for you, the person creating the note, and the buyer that's getting into the property. So it could work both ways. It could save you some money on one end, and then by offering it, maybe you can get yourself a better qualified person that can, go into your property, or be the homeowner in your property. So now I'm going to move on to the banks right now. Um, the banks with mortgage rates over 7% right now. A lot of the demand when they going into the financial institutions or going into lending institutions right now is down because of the higher interest rates. So um, that doesn't mean that there aren't quality buyers out there. It's just that everybody's a little spooked by these rising interest rates and where things were, and so they've kind of sitting on the sideline. But when you create notes, you are looking for someone that's not necessarily the traditional type of buyer that goes down and gets qualified, or they try to go down and get qualified and they can't necessarily get qualified. So we're looking at a bigger pool of buyers. If somebody did get qualified, great, then, we can still structure financing for them. They're just not going to, use that loan that they got with the bank. But we're also looking for people that, for whatever reason, had some issues in the past. The banks won't qualify them. That's part of what we're going to talk about with the banks as well. The availability of credit, a lot of times, and this is all market specific. So you may be in a market where this is not happening, but overall, banks are pulling back on their availability of credit because they have a lot of exposure a lot of times on the commercial side, and possibly what they call this Basel III, where they're having larger banks are having to keep more reserves in the bank to guard against some of the risk that they have out there. So a lot of times somebody who is has a decent credit score, has a job and things like that, just don't meet all of the requirements that a bank needs them to meet in order to qualify them. Doesn't mean that they're not a good buyer. They could be worked at a job for a certain amount of time and have a good down payment, and for whatever reason the bank is not qualifying them, but you can, that's somebody that you can offer financing to, if you are a note holder, or if you're creating a note on a property. So but the credit availability is the lowest it's been since 2012. And a lot of people are saying that we're going to go into a recession. That's probably only going to get worse over the next 2 years or so, depending on how long the recession lasts, if and when it does hit. So again, these are all just reasons that push people towards considering looking into notes, whether it's, like I said, buying a note, creating a note. um, you want to try and understand that side of real estate right now for this particular time, because when banks start to have trouble, this is where creative financing or creating notes, buying and selling of notes, um, there's an uptick in that. Also, banks are trying to clean up their balance sheets. They have they have quite a few toxic assets on their books, which we'll kind of get into, in a minute. But they want to try to clean up their books, you know, right now, because of everything that's going on. Like I said, they have some toxic assets on their books, so they want to, get that off, get the cash in, make the books look a little bit better, look at some other opportunities to do some other things, guard against some of the risk that they have. So when banks start to, get into a little trouble, so to speak, or, there's some issues there, this is where creating notes, private money coming into the market to create notes, buy and sell notes, that there's an upswing with that. So that's the deal with the banks right now. Also, now when you talk about the commercial and multifamily, we kind of hinted on this. There's a lot of stress in that commercial and multifamily. Multifamily because of the interest rate. A lot of that debt that people got into, the syndications and things of that nature to take down these big multifamily, um, types of commercial properties is coming up for refinance. And a lot of them are not going to be able to refinance, especially if the rates stay where they are. Even if they come down somewhat, a lot of times people got into these deals with interest rates, 3%, 3.5%, maybe even lower, just depending on who you were or what type of syndication you were a part of and what type of financing they were able to get. So even if it drops down to, let's say, 5.5, 6, that's still, probably double, um, more than what the original financing was. And what's happened also too is that your expenses on the property are going up. It's probably more expensive to heat the units. The maintenance on the units most likely has gone up. So the expenses that come along with multifamily or commercial are going up, and then like the cost to refinance on what you're going to have to pay really shrinks any type of profit margin and may turn a lot of these deals negative. So, um, again, understanding, how to put together, create a note on a property could help a lot of these situations. If you know somebody that's in trouble, if you can create a note a certain way, maybe you can help that particular property owner out of their situation. Again, bringing in private money, if you can structure it where it makes sense for everyone, that's possible as well. So, again, these are all reasons, based on the current market, why real estate notes is a good thing to understand and look at, as a strategy. So, 20% of commercial and multifamily mortgage balances are going to need to be refinanced within 2024 and 2025. I think the number is like $2 trillion worth of debt when it comes to commercial is coming up for some type of either refinance or needs to be paid off. So basically, you have to refinance it or sell the property to pay off the loan. That's gonna you know cause serious issues, and they're really going through price discovery at this particular time, and people are not, people who want to buy these properties and have the money to go ahead and take advantage of the commercial side are not in a rush because they know that you're under some type of stress and they can really just wait you out. We have a lot of these people turning these homes back over to the bank, and then what the bank will do at some particular point is try to, you know, get rid of, the property through most likely selling the note on it. So if you have those relationships, it'd be a good time to really, you know, reach out to the commercial lenders and banks and things of that nature. If you know them, if you have relationships with them, keep in touch with them. They're probably going to, have some inventory that they'll be looking to get rid of soon, if not already. Especially if you have a relationship or know someone at a regional or community bank. A lot of those banks jumped in heavy into the commercial and multifamily, around the time of the pandemic. So they're experiencing some issues. So finally, Fannie Mae, they just had a recent loan sale of non-performing notes. I think it was just under about 1,600 loans that they sold off. And what they do is they sell those to private equity and hedge funds. People that have, hundreds of millions of dollars, they can buy these loans in bulk. And what they do is that they go through what they purchase, because when you purchase these, you don't know every home that you're purchasing, but you're purchasing the whole pool and you're getting it at a certain percentage of this unpaid balance. So let's just, I think in this one, it was close to $250 million of unpaid liens. They may be paying, $25 million for that. That's 10 cents on the dollar for, what the outstanding payments are, because it's not like those payments go away. Those people actually owe, that money. So if they do sell, some of that stuff is going to get paid off to them, which would be a great return for them. Or they'll have to go ahead and modify. And even if they modify, because they're buying it so low, there's a large chance of them making a good return if they are able to modify those loans. So, um, that's happened. And you're probably going to see more of that. So and what they do too is like what they don't want. Let's say out of 1,600 loans, let's say, 10% of it, it comes in that lower price band that we talked about earlier, that it's just really not worth a hedge fund's, time and effort, or a um, private equity to deal with a low balance $100,000 house, $80,000 house, $125,000 house. They rather stick to those, four, five, six, $700,000 houses that is in that pool, and get those reworking, because those are higher payments, and it's just more of their time wants to be focused to that. So they may take about 10% of that, 1,600 loans, 160 loans, and then what they'll do is just sell it, to smaller investors. They'll offer them in smaller pools. Maybe you can buy five, 10. You can buy one at a time if you want. So that's how it kind of trickles down to the individual investor level, smaller investor level. And you can take, you have the chance to buy those. And this last loan sale, a lot of the properties were in the New York and New Jersey area. And when this comes out, you're going to see a lot of these homes that have been in foreclosure for, 3 years, 4 years, to the point where, what it would take to them for them to get back on track. It's less likely that a person is going to have enough, down payment to put down to, kind of rectify or be in a position to modify this particular loan. And probably foreclosure has been started on these. A lot of people are concerned about New York and New Jersey, because of the long foreclosure process. But you can, a lot of times, the Fannie Mae has already started the foreclosure and maybe 50% done. They may be 75% done on these. And when you take these over, you just want to do an assignment of foreclosure, so you can jump in where they are and not have to start from start over. So if you're 60-70% down the line, you just got to take it and finish it out, which is a good thing. It'll save you that time. It won't you won't get dragged out for years and years and years. But the average days that a person's been in foreclosure on a lot of these properties is about 1,000 days. There's about 1.9 million homes that are in some form of foreclosure. And what these banks are going to do, um, is package these up like they did with this non-performing no sale, and then they're going to sell them off. You know, they're not going to foreclose on 1.9 million homes, even especially in an election year. But even if it wasn't, they're not going to do that. They're not going to. These banks are not going to take back all of these properties. So what they're going to do is package them up and sell them off to secondary market. Secondary market is then going to, offer some of these as one-offs or small pools to, other investors. So just this last one just happened to have a majority of properties that were in New York and New Jersey. Usually, the pools, have properties all across the country, the Midwest, South, East, and the West Coast. So it all depends on, what you can afford and what you're looking to do. But you can find notes in all types of price ranges. So people, you don't have to have $80,000, $50,000 just to get into the note business. I mean, if you do have that money, great. You probably can buy multiple notes. But if you're someone that has, 10,000, 5,000, 15,000, you can, you know, have the opportunity to look at something out there that makes sense, and you can just kind of grow it from there. So, just wanted to, kind of go through this and talk about, the current market conditions and why it's a great time to, how it translates into a good market for real estate notes. Hopefully, that made sense and you could see the connection there. But a lot of factors are definitely in the favor of understanding notes. Like I said, creating notes, buying and selling of notes. So if you have any questions, if you watch the replay, you can reach out. Telephone number is 973-475-8488. Or you can send an email to investorgmr@yahoo.com. And hopefully we can talk and eventually work together and try to make note investing a part of what you're already doing or introduce you into the note business and hopefully see you prosper in this. So, with that, everybody have a great night, and we'll be back next Tuesday. Again, we'll be talking more about deals and breaking down real estate note investing. We try to break it into smaller parts, and we'll go into a little bit more detail about it. And that's what we do on Tuesdays and Thursdays at 8:15 p.m. And we usually don't go, excuse me, longer than 30 to 45 minutes, something like that. So if you have some time, please join. All right. All right. We'll talk to you soon. Have a good night.